Let's look at large green lentils. My name is Trent Klarenbach with Klarenbach Research. Today is December the 13th, 2024, and today we will look at large green lentils. We'll look at the member area of our website. We'll scroll down here and we'll look at the charts. That's medium. We want to go back to large green lentils, and the site is opening up here now. And you can see our sentiment here showing right away. And we can see that we're neutral over the next month and bearish on the longer time frame. And the reason for that is the long-term trend remains down. And we have to honor the long-term trend in all situations on the longer time frame. We'll scroll down, look at the different price charts here on the website. And this one's interesting to me. It's the logarithmic chart dating back to 1992. I drew this trend line, and this trend lines. It's drawn almost a pencil, I guess you might say, on this chart. It should be drawn with a crayon nonetheless. But you can see how we've connected these tops and how it's acted as resistance in the past. We have a few blips above there. And right now we're trading below that long-term trend line. And you can almost see a head and shoulders pattern forming here with the left shoulder ahead. Will the right shoulder form? Will this price rally up to test this trend line as it often does on the break to the downside through a trend line? But we want to keep an eye on this. I'd be really concerned if the price gets below 40 cents, because then I can definitely see some lower values if that happens. But right now, we're nowhere near 40 cents. So let's enjoy and relish in these high prices and see what, look at the chart, see what holds next in the future. This is my Klarenbach price index for Saskatchewan delivered plant. You can see by the chart that we are, around that 60 cent a pound level, and we're trading still above the 10-week moving average. We became bullish back in it was probably September, I guess it was, maybe August, and we broke above the 10-week moving average, and now we're finding support from it, and now we're kind of testing it again. There is some overhead resistance here at 63 cents. I don't think, depending on where you've got to, maybe your delivery point has been 63 cents, but my index hasn't been above 61 cents yet. So right now, it's really, we really want to see what happens here. If, we break above 61 cents, then we make a new highs, and we have to assume the resumption of the short-term uptrend. But if we break below, this looks like 57, let's say 56 for a round number, and then, we have to start becoming bearish again in the shorter time frame, which would line up with the longer-term downtrend. This is a logarithmic chart. And I drew this trend line here, just, showing the previous resistance levels. We haven't retested that resistance level. I think that will happen inevitably, but it has not happened yet. We're still hanging around that 60 cent level, which is important because it's a round number. We get above there, people are going to become bullish, but we start trading much below 60. And then, of course, the bearish sentiment will rise for sure. But these charts are interesting. I have to be neutral in the short term, the next 1 to 4 weeks, because until we start making higher highs or lower lows. So it's what I call a no trade zone for me, but these are certainly great levels, great price levels. We're not too far off the previous resistance level. If you're comfortable with these prices and they meet your cost of production, it might be a good time to take some profits. My name is Trent Klarenbach. It's sunny in Saskatoon. Life's good.